pleased to welcome Mary Ffolkes, Managing Partner at Genex 360. Since joining in 2023, she has been active across investments and portfolio management, bringing deep leadership experience from roles as CEO of Axelis and Trimark USA, President Americas at Air Products and Chemicals, and senior position at GE and Johnson's Control. She also serves on the boards of Valero Energy and Masco. Marie, thank you so much for joining us today.
Thank you, Khalid. It's my pleasure.
So, Marie, would you please share with us your journey into private equity and what led you to become a managing partner at Genex 360?
I appreciate that. Thanks for the warm welcome. It's a pleasure to be here with you as well as representing Genex 360. So I've spent many years leading global P&Ls and startup operations in businesses across 9 countries and 10 states. So I had the opportunity to run multi-billion-dollar P&Ls, engineering, production, as well as industrial services. And my career took me around the world. I love living in Asia, in Latin America, in Europe, and obviously the US. So it really shaped how I thought about people, leadership, as well as execution. What brought me to Genex is after serving as CEO of Trimark USA, as you mentioned, which is a private equity-backed business of $2.4 billion in revenue, I partnered closely with investors and management teams. And so that led me to really get excited about the opportunity to continue to drive value creation at Genex, which really boils down to strong teams, operational rigor, and a clear strategy, Khalid. And so that's the lens I bring to every business I partner with.
And today, do you see that the US middle market segment is still relevant, is still interesting for investors?
Oh, I do believe it is. I think that where private equity in the middle market, even the lower middle market, can create more meaningful and durable value because I think it consistently grows. There's simply the opportunities there because many businesses are formed in that space. The markets are large, so the total addressable market, the TAM, is quite significant. We also see that it's highly fragmented, which gives us a great path to grow from a buy and build strategy. And most likely, the operational improvement value lever is there because through thoughtful acquisitions and that organic growth that we build on, it gives us a great opportunity to improve processes and systems while maybe outsourcing a few of the disciplines and really driving value creation. We think that this segment is incredibly, gives us great opportunities, not only for product innovation, but for geographic expansion and most importantly for operational efficiency. So I see this segment of the market is incredible, a lot of growth, a lot of opportunity, and I think a combination of our skill set at Genex, which is operational rigor, the agility with our buy and build, really helps to grow those diversified levers and create that sustainable value creation.
So coming from, a portfolio side company, how would you define Genex's investment philosophy compared to competitors? And especially, you mentioned it a little bit, but to, let's say, portfolio growth?
To answer your question, Khalid, about Genex 360 investment philosophy and approach to portfolio growth, Genex was founded in 2006 with a very clear vision, which was to build a private equity firm where operating expertise and a very disciplined investment philosophy work hand in hand. So our approach is really founded from 3 of our 4 founders who came out of GE, and they had more than 25 years of senior leadership experience. And that was the foundation that shaped our culture and our approach. Today, we manage over $2.7 billion in AUM, and we invest in the lower middle market industrial businesses and services companies. We really focus on, Khalid, essential services businesses. We're based in New York. We have a team member of 43 professionals that span investing, operations, and finance. And so we have a 3-part approach to our value creation model. It's highly focused on proactive sourcing, which the investment team leads. We also spend a significant amount of time mapping the fragmented markets, building deep industry relationships, and really cultivating a long-standing partnership with executives who introduce us to founder-owned businesses long before the traditional auction process starts. That's a sourcing engine for us. That's highly competitive advantage for us. And we use it across every fund, which is tremendous. The second approach we have is our buy and build strategy. What we do here is we partner with management teams to combine a really strong platform within the sector that we've databased with smaller companies that are complementary tuck-in acquisitions. We integrate them thoughtfully and we strengthen the commercial, operational, and financial capabilities along the way. And then the third part of our strategy is where my team and I come in, which is we have an in-house operating partner that works side by side with the investment team to support that effort. And so we are really part of the team. We get paid the same as the investment partners in terms of our compensation. And this third leg is where we drive a lot of value creation. We have a track record now of very successful exits across those cycles. And our performance, which is incredible, incredibly proud of, ranks in the top quartile. So again, this comes from a very disciplined underwriting approach, our buy and build, and our active ownership, and we have a deep alignment with management. So really, that's what drives our investment philosophy.
So if you take this, this entire ecosystem that's built within GenX 360, how would you evaluate any potential investment?
We have because we invest in industrial and industrial business services that are essential services to the economy. We target companies that are highly fragmented but are very structurally advantaged in their sector. They're doing something that no one else is doing. So we look for companies with that fundamentally sound operating model. They can either expand into new markets, they have a great product, they have a really good management team, and they have a right to exist. So we see a clear opportunity to accelerate growth. And when we evaluate potential investments, we look for how we can exit with greater than 3 times our multiple of invested capital. So we look for those businesses that have strong growth cycles, either through product or market expansion or through operational efficiency or even through strategic acquisitions. And then we really grow them. We look for large fragmented markets. We look for the companies that are doing well. We're either top of the sphere in that. And we look for a unique product and a really excellent management team that we can build upon.
And so today, which I'd say subsectors or trends do you see as the biggest opportunity in the current market?
Oh, great question. So we see technology that's enabling productivity rather than disrupting core business like IT services, tech-enabled field automation, data-driven operations. We find that these are great opportunities for the current market. We also look for areas like food service. We look for healthcare. We look for climate and sustainable infrastructure. We look for services around water. We look for anything that really has that robust data governance with advanced analytical and AI tools. And we use that to make an informed decision around some of those sectors. So we love those sectors, like I said, essential services businesses that are growing in the market. They have strong secular tailwinds, and that can help us through many cycles. They're not glamorous, but they're essential. And those are the sectors we love to invest in because people are using them every day.
Very, very interesting. And so if you look at private equity, for example, in Europe, it sometimes gets a bad press. What you mentioned is how you work hand in hand, as an operational team and support the executives within the company. Could you please, tell us what improvements and how would that work with your portfolio companies today?
Great question. So our operating partner model we are sit side by side with the investment team. We partner on the deal from the initial new deal review all the way through sitting on the board, being part of the team all the way through exit. So we become like a chief architect, or let's say a chief engineer of the value creation plan. We call it the VCP. And so that's a bridge between the investment thesis and the management team that's on the ground. So our approach is part coach, part strategist, part implementer. And so we really try to translate our investment thesis goals into actionable projects. So we provide tools, resources, and our what we call our Gen X playbook, and we hold everyone accountable for that execution. So our operating partners, as I mentioned, act like a bridge. We are hand in hand, and we do the value creation planning. We work on the operational improvement, and that can be anywhere from optimizing the supply chain, streamlining processes, improving procurement, enhancing the sales effectiveness with new sales tools, or even digital transformation, for example, e-commerce. We're also very much involved in the talent and leadership development. So we're assessing the leadership teams as part of the due diligence, where we're identifying key executives that we would absolutely keep in the company and develop and grow. Or where there's a gap, we'll look for CEOs, CFOs, chief growth officers, M&A leaders, and finance. And we really try to foster a really strong culture. Our goal is to build a company that we can scale and exit, and that company is sustainable. We also are strong guidance with problem solving. So we serve as an advisor to the CEO and the management team. We're diagnosing complex challenges, whether it's pricing or implementing effective solutions, whether it's a new sales incentive plan. And then we do governance and oversight. So we often take a board seat, as I mentioned, or an observer role. We're assessing each of the companies on a monthly basis. We're putting in data analytics in the companies, but we're also meeting with the CEOs and CFOs weekly, and we're really focusing a few things weekly. We're focusing on sales growth, we're focusing on cash management, and we're focusing on how the talent and the team is growing. So there's a strong alignment between our investment team and our operating team.
And what challenges do you see leaders in private equity face today in a, I'd say, evolving and continuously more competitive market?
No, great question. I think one of the toughest challenges we're facing right now as this market continues to evolve is the high cost of capital. We think this is a dominant factor. It's a direct impact when you have higher interest rates that significantly increase the cost of debt, which is a critical component of our leverage buyout strategy. And it's, it impacts other capital deployment strategies, particularly within private equity, whether that's CapEx or growth. And so we think that the higher earnings growth that we need to drive and those target returns, this has become probably the major constraint in deal making. The other one, I think, that's second to the high cost of capital is the valuation gap, because you have elevated rates that really create like this persistent value gap between buyers and sellers. Buyers of, those assets, it's based on a higher discount rate. So while sellers, who held assets in a low interest rate environment, they're reluctant now to accept those lower multiples. And then the third one, I think, is around liquidity and exit. A lot of the LPs are asking for DPI. So we think these high rates have sort of stalled some of the exit opportunities. You're seeing the IPO market starting to pick back up again. But obviously M&A is on the rise, and we like to see that. But this liquidity issue has created a crunch. And so it extends the holding periods for assets, and it makes new deployment less attractive while existing portfolios are still waiting to be monetized. This, in addition to, I think, the geopolitical risk, which is the uncertainty around tariffs and what we see happening, the supply chain disruption, and some additional regulatory scrutiny, I think, is also added to some of these issues around what we think are major constraints in this market.
And to continue on the challenges around private equity, how do you view the role of diversity and inclusion in private equity, especially at leadership level? And personally, what advice would you give to aspiring women in the industry?
Oh, it's a great question. I think that it really is performance data is really simply too compelling to ignore around the social imperative of the diversity of thought, the diversity of ideas, the diversity of that can really help drive out performance in a company. You know, I can tell you that our team is very diverse and they come with significant ideas. And having, with my own experience leading global operations, very diverse teams, having lived in Europe and in Asia, we make better decisions because we are deciding different perspectives from around the table. We challenge those assumptions, we identify risks earlier, and we uncover a lot of opportunities that others may have missed. So we think that diverse teams, we pressure test more, and ultimately, I think we make a smarter call. So when judgment, compounds over time, that difference shows up directly in our returns. So I think that there's an opportunity for us to continue to broaden our perspective and see what our customers want and how we can meaningfully sell to our customers, deliver to them, and make sure that they're successful. That's what this boils down to. So I think that we can leverage each other's experience and really improve our outcomes. I do also think that for aspiring women in the industry, my focus is really on building lasting relationships. It's really about it's not just one traditional way to get into private equity. Mine was a little circuitous. I started with academic companies in finance and then went on to lead P&Ls all over the world and then got into private equity. So I think a diversity of experience with women who are exceptional, taking on the high risk roles, and I think leading with competence and conviction, the performance will really be, I think, additive to private equity. So I think it's a smarter way to win. And I think that, recognizing the opportunity in this market can be great for other women to take on a leadership role.
And would you mind sharing with us a particularly challenging deal experience or operational difficulty you faced and the lessons it taught you?
Obviously, we all have a lot of challenging deal experience, especially when I took over as CEO of a private equity firm and COVID hit and I lost 85% of my customer within weeks. So the customer base really shut down across restaurants, hospitality, institutional food service. What I did very, very quickly is I developed and focused on the traditional growth and integration playbook around crisis management. And so the first thing was preserving liquidity and protecting the balance sheet. So in an environment where there was sudden shock, we did that and brought in hundreds of $1 millions on the balance sheet. I stabilized the operations and supply chain amid the global disruption. I went out and visited customers. I went to each of the DCs. We had 800 salespeople. We were over 2.4 billion. And while customers themselves were under existential pressure, I was really managing the team internally. So supporting the employees, so maintaining organizational cohesion. I had weekly all employee meetings weekly. I sent the entire team home and we were hiring people without even meeting them. And then I repositioned the business for recovery. So I grew $1 billion during COVID, and that was all and grew market share. And that was all from bidding on almost everything and driving to win. And so I quickly moved from a growth CEO mindset to really one of resilience and recovery. I protected the enterprise, and then I positioned the company for a full turnaround, and we rebounded tremendously.
This is a great story. Listening to you, I think that there's a book about the PE playbook, to be straightforward. But just to conclude, I know we don't have much time. Looking ahead, where do you see the broader middle market PE landscape within the next 5 to 10 years, and how would Gen X 360 position itself?
I think looking ahead, one of the biggest opportunities in the middle market will come from, founder succession, will come from a significant amount of businesses that have been founded 20, 30 years ago by entrepreneurs who are thinking about liquidity, they're thinking about their legacy, they're thinking about leadership transition. And most importantly, they are looking for an opportunity to exit. So many of them have built terrific companies, but they haven't institutionalized the infrastructure, the system, or the next layer of management to scale to the next chapter. I think this creates a real opportunity for private equity partners who can step in, not just with capital, Khalid, but with operational expertise, a growth mindset, a sustainability mindset, but also a long-term mindset. So at the same time, we see a growing desire for global expansion, particularly into fast-growing regions like the Middle East, where governments and enterprises are investing heavily, and I've been spending quite a lot of time in the Middle East. We see an opportunity in tech-enabled capabilities. We see many businesses that are going to be very attractive for international growth. We also see they need partners who understand how to scale operations, to manage risk, and most importantly, to build the right team. So at that intersection, I think that succession plus the global growth will play a direct opportunity in how we operate at Gen X. So we will help professionalize their organizations. We'll be there to strengthen the C-suite, and we'll help them build those scalable platforms and really expand beyond their original footprint. So we're very excited to see what's coming next in the next 5 to 10 years. So it's not really just buying a company, Khalid. It's about preparing it for its next phase of leadership. And for us, that's something we are very excited about.
Marie, thank you so much for your time and all these insights.
You're welcome, Khalid. It was my pleasure, and I truly enjoyed it. Have a great rest of your day.